Tino, babe.
Hey, yo, check, yo, hey,
Keys Cartel.
yo, check.
Hi guys, welcome back to the channel for my second video today on credit scores, how they're calculated and how you can track and improve yours. Now, if this is your first time watching, my name is Yume Rende. I'm a CMAP qualified mortgage advisor and I've been working in banking for the last roughly 2.5 years. Now, this channel is basically me gathering all that information I've picked up over those years and giving it back to you guys because I know this is the kind of information you guys want to know more and more about. Now, with this video, I'm going to be starting a new playlist on my channel called Finance. This is going to be separate to the property playlist I've just started because these videos will focus more on a financial term or product. I'll explain how it's made or how it's created and how it works, and then show you how you can positively impact that in your day-to-day life. Okay, so hopefully through this playlist, we can all become more financially literate and financially aware in our day-to-day lives. Before we get started, I just want to say a big thank you to you guys who've been sharing, commenting, liking on the videos. I do really appreciate it. It's mad. I think before I even dropped the first video, I had like 100+ subscribers, which is mad. So thank you guys, honestly. Let's go. Let's get started. So what is credit? Credit is the ability to borrow money or product with the understanding that you're gonna pay that back at a later date. Now, some popular types of credits are credit cards, phone contract, buy now, pay later, car financing, and mortgages. Now, credit comes in one of two ways mainly. There's secured and then there's unsecured lending. Secured lending are stuff like mortgages. That's because if you don't make your monthly repayments, the bank has a right to take your house or repossess your house back from you. That's because your mortgage and the monthly payments there are directly linked to your house. If you don't keep up with your payments, they're gonna take your house because you use their mortgage or their loan to buy that house. Credit cards is a form of unsecured lending. That's because if you were to take out a credit card and you had a balance on it, it isn't directly linked to anything. So if you don't pay the balance, technically they can't just directly take your house because it's not directly linked, it's not part of the contract. Instead, they'll just ruin your credit score, but it's unsecured, so they're not gonna take your house, at least. So what is a credit score and how is it made? In the UK, when you go to make an application for lending, for a phone contract or a credit card, anything like that, the lender will most likely go to a credit referencing agency to see what kind of information they have on you and your credit history. This helps the lender make fair and responsible decisions on whether to lend you money and if so, how much, based off the information that these credit referencing agencies have on yourself. In the UK, there are 3 main credit referencing agencies. That is Experian, Equifax and TransUnion. Now, these 3 companies work with all the banks, or the building societies, or the phone contract providers, or the major retailers, basically to pull and give out information about your financial activity and history. And then they put all this information together to make a neat little score, which is your credit score. And that can go up to 999, 710, or 700. So what kind of things are taken into account when calculating your credit score? They mainly focus on 5 things. That's payment history, amount of credit used, length of credit history, type of credit, and new credit, amongst other things, but today we're just going to focus on these 5 things. So payment history accounts for 35% of your credit score. That mainly looks at if you've been able to meet your current credit agreements. So do you pay your current bills on time, or are they late, or do you even pay early? That kind of information will give them an understanding of how you would handle credit if they were to give you credit themselves. Total amount owed counts towards 30% of your credit score. Now, what that's trying to see is how much of the credit that you have available are you actually using? And that's sometimes shown as a percentage and referenced as your credit utilization. Basically just means what percentage of the credit that you have available to you are you using? And sometimes that can be shown as a percentage, which is normally known as your credit utilization ratio. And that's basically just saying what percentage of the money that you have available to you are you actually using. So for example, if you have a credit card and the credit card has a balance of £1,000 or credit limit of £1,000, sorry, and you've used £500 of that £1,000, you've now used 50%, so your credit utilization in that situation is 50%. Now, Equifax gave some guidelines and said that credit utilization ratios from 75% and above is seen as a red flag. That means you're using too much of the credit available to you, that you might not be managing your finances properly. Now, 75 to 50 is normally seen as an amber flag. It's not too bad, but it might be cause for concern. So you can then assume that 50% and below is all green because they haven't mentioned it. But ClearScore states that between 20 to 30% on your credit utilization is a good place to be at. It's kind of a sweet spot because you're not using too much that you're gonna start causing any issues for yourself, but also you're not using too little, because if you don't use your credit card, then you won't have any payments to make since you're not using it, and therefore that won't then benefit your payment history, like I said, which accounts for 35% of your credit score. Length of credit accounts for 15% of your credit score. Now, that's basically saying people who have longer credit histories or longer credit relationships with companies, there's more information for the other companies to then look at because you have 5+ years of evidence to kind of filter through basically. The type of credit you have accounts for 10% of your credit score, and that's basically just trying to see what mixture of credit types you have. So do you have 6 credit cards, or do you have a payday loan, or do you have a mortgage? That kind of information, because that would also give the company a bit of information about what type of credit you tend to take out. And then finally, the last 10% is new credit, and what that's looking at is how many credit searches or credit inquiries you've had within a certain period of time. Now, Experian also says that between 1 to 2% or 1 to 2 credit searches in a 12-month period is all right, but 3 and above might signal that you're having financial hardship, and that might make lenders reluctant to lend to you because they can tell that you're desperate for borrowing. Now, you can have as many soft searches as you like because soft searches don't actually show up to anyone else. However, it's the hard searches you need to be aware of because they will be shown to everyone. How to check and monitor your credit score? So now we know what a credit score is and we know how it's calculated. Before we can start looking at improving your credit score, you need to find out what your current credit score is. So like I mentioned earlier, there are 3 main credit referencing agencies. That's Experian, TransUnion, and Equifax. Now, I'm going to show you 3 websites that you can use to actually track your credit score, and each one of these websites is actually linked to one of the 3 main credit referencing agency. So in theory, you could get all 3 accounts and get a complete view of your credit score, or you can just get one that you like using and use that to get an understanding of what your credit score is and how to improve it. So the first website I'm going to tell you about is called Money Saving Experts Credit Club, and they pull their information straight from Experian, and here's what their website looks like. Now, what I really liked about it was that I got an email every month when it updated. They have an affordability score, your full Experian credit report or credit file there, eligibility and promotional plans for credit cards and personal loans. And there was a things to know section which told me the different things that were important to Experian when they were calculating my credit score. The second website I'm going to tell you about is called ClearScore. Now, ClearScore gets their information from Equifax, and here's what the website looks like. And what I really liked about ClearScore is that they update their credit scores every week instead of every month. And that's really good feedback for anyone trying to improve their credit score, because anything that they've done last week should impact their credit score next week. And you can then see exactly what kind of things and how fast you're actually improving your credit score for your day-to-day actions. They also have an app, which I think was very useful. I have it on my iPhone. You can get it on the Play Store, wherever you Android people call it. But you can get it on Android as well, and it just means that you can very quickly check your credit score while on the go. They also show you your credit file with Equifax, as well as credit card and loan eligibility and promotional offers. Something else they do is they have like a dark web search protect, which searches the dark web to see if any of your information has actually been put onto the dark web or to be sold. With identity theft being a growing concern and something you don't want to be caught up in, it's a very useful tool to have. And they also have like a timeline to show your progression over the last few months, and a coaching section which tells you tips you can use to improve your credit score. Finally, there's Credit Karma, and they pull their information from TransUnion, and here's what their website looks like. Now, prior to the video, I actually didn't know about Credit Karma. So I don't really have an opinion on it. It seems good. And if you use it right now, let me know in the comment section below if it's good and if it's something that you think people should use more of. I've now downloaded it on my phone, so I'll give it a go and see if I like it more than the other two. So how do you improve your credit score? So from those three websites, there is a wealth of knowledge about how to improve your credit score. And to be completely honest with you, there's no better way of you finding out how to improve your credit score than you going onto one of those websites, creating an account and looking at information that they have made personally for your credit file. Because all that information is purely off your credit file. So if you're looking to actually improve your credit score, go on those websites and read all the advice they have for you there, all the indicators they have available to you. Use that information, use these tools to improve your credit file, because these are Experian's rules, these are TransUnion's rules, these are Equifax's rules, how they calculate your credit score. But that's basically it, guys. We now know what a credit score is, how it's calculated, how to track it, and how you can improve it. I hope you found it beneficial. Like I said, if you have Credit Karma right now, let me know in the comments section below. If you have any feedback and opinions, let me know as well in the comments section below. And yeah, in that case, you guys have a good night. Bye.